Welcome back. The Fed's big decision on interest rates is fast approaching this week. The central bank set to meet tomorrow and Wednesday to decide whether to cut rates, a major priority for President Trump. And Fed Chair Jerome Powell suggested last month that it could be time to do so. But the Fed will consider new data showing inflation ticking up and a slowing job market. Now, this meeting also comes as President Trump tries to remake the Fed, pushing to oust a member of the Board of Governors and install a White House advisor to serve. Joining us now, NBC News senior business correspondent Christine Romans and former chair of the Council of Economic Advisors, Jared Bernstein. Christine, let's start with the rate cut decision this week. Are we still expecting them to cut?
Yeah, the Fed has been on hold for so long here, worried that inflation and maybe the president's own tariffs might fuel more inflation. But now the concern seems to be a weakening job market. So the expectation, Anna, is there will be a 25 basis point, as they say, a very small cut to the Fed's target interest rate. You can't rule out maybe a little bit bigger move. Potentially, a few people think that could happen. But it looks like the conventional wisdom, they think the Fed, for the first time in months, will cut rates on Wednesday.
Quickly, if you will, Jared, what are your expectations? And what does it mean for the average American if they do cut rates?
Yeah, great question. Well, my expectations are much like Christine's, but the market expectations are a 96% probability on a quarter point. That's what Christine was talking about, a quarter point rate cut. What does that mean for American households? It's kind of really more a question of what did that mean? Because at this point, that cut is priced into markets. One thing we've seen is the 30-year fixed rate mortgage rate coming down, somewhere even below, I think, about 6.5, maybe 6.3 last I looked at it. So that was 7 not that long ago. So it means lower mortgage rates, lower credit card rates, auto loans. This is helpful for people who are considering borrowing, maybe engaging in a project, small businesses, households. But at the same time, the backdrop, as you said, is a weakening labor market, and that's also a very big deal for working Americans.
And now to those other developments involving President Trump's efforts to fire Fed Governor Lisa Cook. Separately, Christine is trying to install White House advisor Stephen Miron into another open seat. Bring us the latest on both fronts.
So Stephen Miron would need to be confirmed by the Senate, and that could happen. I mean, it's so interesting. We don't really even know who's going to be voting this week at the Fed meeting because there's so many developments up in the air. The president has appealed a ruling that would have allowed Lisa Cook, that Fed governor, to do her job this week. So we're waiting for an appeals court ruling on that as well. So if Stephen Miron gets confirmed by the Senate, he could theoretically be in place for that Tuesday meeting and Wednesday meeting and vote. And Lisa Cook, we're just still waiting to see what happens with her. It's interesting. NBC News has reviewed some bank records of Lisa Cook that appear to cast doubt on the White House allegations about mortgage improprieties. We saw data or paperwork that showed her Atlanta home was listed as a vacation home, not a primary residence. Also looked over a loan summary and a national security questionnaire from 2021, again, that listed that property as a vacation home. Her lawyers have said there's no wrongdoing here at all. There is no mortgage fraud. This is a sort of a witch hunt from the administration trying to get a seat open for the president to fill.
And it says a vacation home on those documents that we've looked at, while they've been claiming she tried to say it was a primary residence on loan applications for a mortgage. Jared, what kind of impact do you expect Trump's efforts, both to remove Lisa Cook and to get Stephen Miron confirmed quickly, to have on the Fed's work?
Well, first of all, let me say that this is such a weird Fed meeting because usually going into these meetings, the question is, what are they going to do with interest rates? At this point, we really know what they're going to do with interest rates. The question is, who's going to be sitting around the table? And I don't think any of us have ever dealt with that before. And I do think it speaks to your larger question. Look, I think I said on this very program, and it wasn't some great foresight on my part, these folks have zero credibility when it comes to these sorts of accusations. So I said early on, I didn't think this had much credibility. I'm talking about the accusations on Governor Cook. It certainly does compromise the independence of the central bank, and we've had this conversation many times. That's exactly the wrong thing you want to do if you're trying to allow the Fed to do its job to help dampen the inflationary pressures. You know, we just talked about the weakening job market. Well, typically when the job market weakens, that takes pressure off of inflation. That's just the way that relationship or correlation typically works. But now we're into a bit of stagflation, meaning higher unemployment, moment, which the Fed would lower rates. At the same time, we're having higher inflation, which the Fed would raise rates. So it puts them in a bit of a quandary. But as we've all said throughout this conversation, they're more heavily weighting the problems in the job market. And that's why I expect to see a rate cut on Wednesday at 2 p.m. Eastern Time.